today is, and you may already know this, but I might add a couple of tweaks to help out, but it's essentially to show someone how to raise their credit score very quickly in order to make them mortgageable or give them a better rate. And by doing these steps, by taking the extra step and helping someone with their credit, it's strengthening the relationship, and then it creates extra loyalty. And that way, because some of us, me, don't have the cheapest rates in town because I have margins that are a little bit higher. Michael, I don't know if you know, but I'm a 23-year producing mortgage loan originator. And so part of my role in this is coaching to share with everyone some ideas to which you can grow your business outside of just the internet lead portion of what we're doing. So with that being said, I'll share with you just a couple of quick tips. We're not going to put a lot of time into this. And then, Michael, I'll answer some of the questions that you put in here, I believe. And then I'll open it up to anything that you guys want to talk about. Is that fair? Okay. All right. So, so as far as credit is concerned, in my experience, the major parts of a credit report are the credit history, meaning how long have they had accounts open? Are they making their payments on time? That's a major part of it. And another major part of it in determining the credit score is the usage of those accounts, those credit accounts. And so there is common practice out there to get someone to 35% of their maximum credit line. What I've discovered in all of these years is the credit score actually can go a little bit higher if you're at the 10% mark. Okay, so $1,000 credit card, 10% is $100. So if someone has a $500 balance, they're at 50% usage. So you want to get them down to $100. That's 10%. Worst case, $350, the 35%. That helps, right? 35% is going to bump them. It could be 10 or 15 points, give or take, per account. But at the 10% rate, it could be 15 to 20 points. And if we're doing rapid rescore, Joe, do you guys have access to rapid rescore?
Yes, we do. It's just expensive, right?
Got it.
I don't know what it is, like $50 per trade line per bureau.
It's usually okay. There, you just removed your other thing there. So typically, rapid rescore is about $35 per account per bureau, right? So you're looking at about $105. What I do is I'll offer the rapid rescore, but only after they have an executed contract or we're in processing, right? Because now there's vested interest. So the hope is that the application and all the documents are so tight that we all know as professional mortgage loan officers that the deal is going to close or not based on the package. Of course, there's unknowns like whatever, title stuff and appraisal is way out of whack or something that comes up that we really couldn't determine up front. But a good loan officer, as you all probably know, can determine at the very beginning, once docs are in, the application is nice and tight, if the deal is going to fly. So if the deal's going to fly and the only thing stopping the deal from flying is the credit score, knowing that each account, you take that balance threshold between 10 and 35% can bump their score. Because I know you guys, Joe, you have a FHA product that can go how low in theory, the black and white?
We'll go down to 500.
Yeah, Michael? Oh, you're saying, okay, you're giving me, okay, gotcha. Yeah,
we pool. So we've got a bucket. We just throw everything in the bucket.
Right. And the thing is the odds of someone with a 520 credit score closing on an FHA loan is very slim. Because we know the black and white doesn't matter. It's a good marketing tool. But that's what I'm saying is that the two big percentages of a credit report is the credit history and the credit card usage, the balance. But another part of the credit history are the collections. Okay. So, and I'm going to jump back to the rapid rescore in a second. But if someone, let's say, is under, by the way, this has been my experience. If a credit score starts with a 5, it typically is because there are collections in place and the borrower doesn't know. Okay. If they're in the low 600s, then maybe they're high balances. If it's starting with a 5, it's usually collections and high balances, right? So the key is to help them because if there's a collection that hasn't reported in a couple of years, for now you leave it alone. But if a collection is constantly reporting every month, their credit score, I use the analogy, it's bleeding, right? And the only way for something bleeding to heal is to stop the bleeding first, and then you medicate it, right? And then you allow time for it to heal, which is zeroing out active collections, like stopping the bleeding.
Oh, I thought you were going to say just shoot them. Okay. Yeah, no, you're right.
Right. But ultimately, it's knowing how to stop the bleeding and then getting those credit card balances at a certain credit credit ratio. Okay, these two components can take someone from completely not mortgageable, that most loan officers are going to say, "Good luck, I can't help you," to taking time to work with them, helping them raise their credit score, helping them understand how to have an optimal credit score for the rest of their life, which makes interest rates on credit cards lower, which makes interest rates on car payments lower. And now you're adding so much value that loyalty is created. I did a loan for a guy back in 2013. He hasn't done anything since. He called me out of the blue yesterday and said, "Hey, I'm looking to buy a piece of land. I know I need to do a cash out refinance. 50 million people were calling me, but I'm not dealing with anyone other than you." And I haven't spoke to him in years, because I know how to dig deep and really build the relationship. So going back to how to get someone to be mortgageable or raise their credit score so their interest rate is lower. A lower interest rate is going to make either the payment lower on a refinance or a purchase, or it's going to increase their purchasing power. Like I've got a guy right now who their par rate on a cash out refi is 7 3/4, and it has a low credit score. At a 7% interest rate, the debt to income ratio drops from just over 57% FHA down to 54%. And so what that means is I can raise the loan and give him more cash because his credit score is higher, the interest rate's lower. So there's a lot of value in helping someone with their credit score. So ultimately, we want to make sure the credit card balances are between 35% worst case scenario, best case scenario 10%. And then you offer the rapid rescore once they're in process, because that's the commitment. And then, okay, it's $100, $200, $300, but guess what? Those are going into the closing costs. So the branch isn't eating it, you're charging it. So maybe 1 or 2 out of 10 might fall out because of things that you don't know about. Like, again, if you've got a tight a tight application, tight docs, et cetera, and you have an idea if it's going to close, and the only thing stopping it maybe is the credit score, right? And knowing that every account can raise the score 15 points, give or take. Every credit card that has a balance above 50%, and you bring it down to that 10% range, and you have a 15 to 20% increase, 4 credit cards is at least a 60-point raise. So someone who has a 580, guess what, is now 640. Now you could take them on a loan without having to charge points in this environment, as an example, right? Anything under 640, you're probably getting hit with points in some capacity. So that's really important. I can deep dive a little bit more in detail if any of you have any deeper questions on how to do that. But that has worked for me time and time again, not only getting someone mortgageable, or not only getting someone a good rate, but because I took the time to do it, they've become a loyal customer, because most mortgage people are not going to do that.
So Jay?
Yes.
The question that I had for you was, you said that you would only do this if they're already in contract. How long do you typically have your contracts for? 30 days?
Good question. So no, what I always do when a realtor's asking me, or when I'm speaking to a realtor, all of my referral partner realtors are trained to know that please ask for a 45-day or less closing. Okay. Now the odds are I'm going to get it knocked out in 30 days, give or take, as long as everything falls into play. And if I get a 45-day contract closing and we close it in day 29, we're looking like superstars, right? Because we closed it way in advance. And if it takes 38 or 39 days, we're still lower than 45 days. But if you do a 30-day contract and you're at day 38 or 39, that's a relationship killer, right? So what I ask is for 45 days, knowing that the rapid rescore takes 2 weeks, roughly, okay? So what happens is borrower, okay, contract is executed, okay, rapid rescore. Pay down the credit card to X, take some of your cash, pay down the credit card, get a letter from your creditor stating what the new balance is, send that to me ASAP, right? That's usually 2 or 3 days. And then it's sent in the rapid rescore. It usually takes 7 to 10 days, and you're all in 14 days. So the file is still moving forward while the rapid rescore is happening simultaneously. And then you have a 21-day loan commitment, right? Or on average, give or take, right? So then the hope, and by the way, on a rapid rescore, if it's very rare that I have a client that needs to do a rapid rescore in order to get a mortgage once they go under contract, okay? Because if they're not under contract, then they're doing the rapid rescore themselves. Essentially do the same process, get the letters from the creditors, and you need to call the bureaus yourself and submit the letters to the bureaus yourself. That way it's not costing them anything. And then by the time I go to do a repull, if I need to, or we have those letters, we can do the rapid rescore immediately because we have all the letters. So if you have time when you're going through the pre-approval process, you have them do it right away, because they should do it whether they're going to close on the mortgage or not, because they borrowed the money, they owe the money. And if by paying them down, they're lowering their payments anyway, right? Which then is going to help with debt to income ratio, right? So, but good question. So ultimately it's from the time we go under contract, it's about 14 days. You got to do it several times so you know what to do, and it's more routine. And I'm happy to help. You know, this is one of the reasons that Joe wanted to sign up, is because I'm a mortgage guy myself, and I can, you know, answer some questions here and there to help move things along.
And so if the person's credit doesn't need to be repaired, what's the timing on your person sale contract? Is it still 45 days and under?
Always. I'm always asking for 45 days, always, because it just takes the pressure off from a time standpoint. But sometimes a realtor will come back and by the way, it depends on the activity, right? So if a listing just pops up and 3 days later there's 5 deals, then, you know, part of an aggressive offer is, hey, we'll close in 30 days, sure, right? But you need to make sure that if you're going to close in 30 days, you need to have a tight application and docs need to be in. Like, you need to have like a strong pre-approval, because if you're scrambling, if you're missing some things on that application, or you're missing some documents that they should have access to, you know, all those little things can delay things. And then also it's saying to the borrower, we'll close on time, but this is dependent on you, right? Because some borrowers drag their feet for whatever reason. So one of the things that I'll say to my borrower is, hey, listen, we don't have a lot of time, but I need your commitment. If you want to close on time, the commitment I need from you is when I ask you for something, you have to get it to me within 24 hours. And if it's going to take more than 24 hours, I need to be very clear as to why, and then we'll just let it ride. Example, I requested a document. The document won't be here for 3 days. Fair enough. At least now I know, and we can mark it up. Hopefully that 3-day document is not a deal breaker condition, right? Mm-hmm. But if it's just a condition that's just, just part of dotting the I's and crossing the T's. That's not a big deal. So again, part of being a good mortgage professional is understanding what the deal breakers are, what you need. And if you have someone shopping, and this is it for me, if when I pre-approve somebody, I'm going thorough. Like I've been doing this for 23 years, so I know how to essentially underwrite the file for the most part. And I also have a great team behind me, right? So it's just really important that you guys have a good, strong support in terms of, and Joe, you know better than I do, in terms of making sure like every field in that application that needs data is put in. And this is another way to have an efficient closing within 30 days. Every document should be labeled what the document is. Because sometimes they'll send a bunch of scans and they're labeled all these different character PDFs. But if you label it June Bank of America bank statement, May Bank of America bank statement, 21 W-2, et cetera, it makes it more efficient and easier for the processor and then the underwriter because everything is labeled. And a few minutes here and a few minutes there per document, that can parlay into days if it's not done right, or it can save you days if it is done right. It's been my experience.
Yeah, and I to kind of go along with what you're saying, Jay, I think what's nice about, we're all come from different backgrounds here, where Nam's only been in the business a few years, and he's, much more tech savvy than Mike or I. Mike is old school, I'm going to hold on to the file with all the details until the last possible minute and then give it to the processor. And then the processor doesn't have anything to do because he did everything. So we're trying to curb him a little bit to where he can get more deals. You know what I mean? But to go along with what you're saying, I think, labeling all those things, anything that we can do up front while we have the client in front of us, guys, is going to make it 10 times easier for Diane, especially now. She's not as busy. She's handling 6-8 files, maybe 10 at the most. But as things pick up, we got great relief the last 3 days on the bond market, right? So we might start seeing that rally coming. We're all praying for it.
Yeah.
And if it does, we go from 8 files to 28 files. And, that's a great problem to have, but details matter. That's all I want to say, is that every little detail absolutely matters, especially when you're labeling a document. And when you're looking at things, we do have to look at them through the eyes of an underwriter, which, but that's why we have Diane. Diane is basically a junior underwriter. She's our LOA.
Yeah.
She's really good.
I mean, ultimately, what I would do also as you guys submit files is go to Diane and ask, hey, Diane, what could I do to make my files tighter and cleaner so it's less that you have to do when you get the file? Like, ask for feedback, ask for advice. And now, and also, I know you've been in it for.
She always gives us feedback regardless.
What's that?
She always gives us feedback regardless.
Okay, good. Yeah, but I mean, ultimately, the being a good loan officer, like part of efficiency and the way to pay attention to the details. And this is a whole different coaching class that I'm about to share with you. But it's time blocking, right? And so what we typically do, we don't time block, we react, right? So if I'm working on a file and I'm tightening up the application, I'm uploading the documents, I'm labeling them, and all of a sudden I see an email, text, or phone call come in, what do we typically do? We respond to it, right? And I heard an analogy, I think from Tony Robbins, where think about what happens to momentum when you get distracted from what you're focused on, right? Imagine you're on the highway going 60 miles an hour, 70 miles an hour, and then you take the exit and you come to a street light. And then it turns green and you get back on the highway. You just lost all of your momentum. So you have to pick it all back up. And the same thing happens when we're working. And so what I do is I allocate time for prospecting, and I'm not doing any admin. And then I allocate time for admin, which is working on files, right? And making sure the apps are tight and I have all the documents and what's missing and et cetera, et cetera. And so when I'm working on those documents, I let people know I'm not available right now. And one of the things that I've also discovered in my career is people will wait. Like, you don't have to pick up the phone if the phone rings. You're not going to lose the deal. As a matter of fact, sometimes it gives you credibility if you don't pick up the phone, because it shows that you're a busy professional versus just picking up the phone every time. It's like, hey, I'm desperate, I need money. So, hey, how can I help you? No, It's let them wait. Now
I
you don't.
couldn't agree with you more, brother.
Yeah, yeah, but the thing is again, it's just it's
Takeaway.
what's that?
It's the takeaway.
Right.
You know?
But the thing is that we live in fear that we're not going to get the deal if we don't respond. Right. And I'm here to tell you that's not true. Now, you don't want to let too much time go by without responding. Like I'm an expert at getting back to people. Right. But it's in the time that I'm allocating. And so and by the way, I'm not a perfect angel. I mean, I react sometimes myself and my time blocking is off sometimes, but letting you know it's important. I'm aware of it. And to be successful and have a sustainable mortgage practice, especially in this environment that's a little rough, time blocking is so key. And by the way, if you leave a message, like my voicemail says, hey, this is Jay Robbins, blah, blah, blah. If I'll leave a message, I'll get back to you. If it's time sensitive, please send me a text message and I'll get back to you sooner. Right. So they now know, okay, he'll call me back. But no, this is time sensitive. I need to talk to this guy right now. And they'll let me know. And then guess what? I'll make arrangements to get back with them sooner. And by the way, if I put my phone down because I'm working on an application, a file, I'll get to it when I'm done doing what I'm doing. It's how I've been doing this for how I've been able to be in the business for this long. Any other questions for now?
Nope. These guys know how I feel about time blocking. I've been running a calendar for 15 years.
And we'll get on another call. I mean, time blocking. We'll talk about that, because the importance of time blocking is not only having an efficient business, but it gives us the ability to keep our nervous system calm. Like this comes back to biology, right? Because if you have a calm nervous system, what happens when you get on the phone with someone and you have a calm nervous system, versus if you're anxious and stressed because you've got a lot of things going on and you're reacting, family calls, I gotta take care of the plumbing on the house, I got this mortgage person calling, I need an application, this realtor's calling. It's like, it's chaos. But if you time block, then you start to, because I time block, it has given me a more balanced life. Like 5 o'clock sharp, I'm shutting down everything because mama and the boys need me to join them for dinner, right? So no one can speak to me or communicate with me at 5 because I'm absolutely with my family, and I leave my phone. That's a huge toll, is you leave your phone elsewhere. Like put it on airplane mode if you have to, stick it away, get on the computer, or stick it away and go do something, go for a hike or a walk and get your mind clear. But time blocking is important, not only to be successful in this business or any business, but in my opinion, to have a calm nervous system, a nice, relaxing, just a good overall vibe that you can carry with you in all the different parts of your life. And again, I'm talking from experience because this is what I do. But yeah, we'll do one on time blocking. Maybe we'll do that next week. Any other questions for now? Okay, so Michael, you had your questions, and I want to address each thing. But it says, how do the leads come in, and how does the CRM do the contact management work? Right?
Yeah, I'm assuming it's part of I was trying to figure out the questions to ask, and those were the ones that popped in my head. I figured you'd get some sort of training for that.
Yeah, absolutely. Just like simplicity. How do the leads come in? They come in right to the CRM, and then you're also notified via text. Okay, so that way you can call them right away. Now the system is set up to where it's all automatic texting, automatic email. You record a voicemail, and then a voicemail can go out as well. So there's a drip campaign that's automatic. And because if you're time blocking, right, and a call comes in, a live transfer, for example, you're not taking the call because you're time blocking something else, right? But you're going to get an alert that, hey, this lead just came in, and then the telemarketing company is now trying to set an appointment. So you can meet up for the appointment. Okay, so that's when they come. That's when the leads, how the leads come in, and how the CRM does the contact management, text message, emails, telemarketer is calling, all to get them to respond and say, yes, I'll take on a call. However, there's nothing like you getting the lead to your phone and then picking up and saying, hey, I know you just filled out a form online. I'd like to take a couple minutes and answer some questions for you. And by the way, go ahead.
Is that because you had a couple of scripts on the welcome package? So
Yeah.
is that the one that you would reference then?
Yeah, I mean, ultimately, I've been doing this. So the content that's in the system is ideal for someone who wants or needs to know how to work internet leads. Okay. What I always like to do is I don't like to start out selling, right? Because sales 101 is not selling, it's listening, right? And what I always like to do is start a conversation saying, hey, got your form filled out. Here's a quick idea of my background. I'm a 23-year mortgage professional with over 155-star reviews. And right now, the intention of the call, fairly informal. I'd like to get an idea of what your goals and situation, what they are. So share with me whatever that means, and I'm all ears. And then I stop. And then I'm just listening to them say whatever they want and just letting, if it's 5 or 10 minutes, I don't care. I'm taking notes on everything they're saying because now I'm building the relationship. And then I'll start going into my questions. And then by the time that's all there, I now can say, okay, here's the game plan. Here's what we're going to do. We're going to do the application so I can look at your credit and make sure it's optimal, blah, 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 blah. And that's the key, is converting this big sales game with internet leads is converting a lead that you talk to application, right? Application is they're in your system and you pulled credit, right? Once you pull credit, there's now a 90% chance it's going to close as long as you follow up properly, right? You've been doing this a long time. So there are people that are going to application. Now, this is important probably for you to know, but just because you're not a 20-year vet in the business, that when you get an application, don't think they're going to use you because you pulled credit, right? The key is once you get an application, you need to make sure you're following up. Like what I do is every Wednesday, specifically on Wednesday, I'll follow up with my pre-approvals and I'll say, hey, checking in to see how you're doing. How's the house hunting coming along, right? Just so they hear your voice. In addition to that, they should be on a drip campaign, which is what the CRM does. They're in application. So I don't know, Joe, are you guys setting up a CRM that you guys have?
Yeah, we have our own CRM with our own existing database, but talking with Matt, obviously it sounds like it's just going to be easier to utilize your CRM for all the leads with the call center and everything else. And then I think, again, correct me if I'm wrong, Matt, but I think what we talked about was basically once the client's in through that system and we pull credit and they are a client, they convert from lead prospect client. Now they're a client. Now technically we throw them in our database. But
right. Yeah.
And the reason I think for training purposes and everything else, and as we build on other 2-3 man operations, I just want it to be systematic. And it's just going to be so much easier to have everything run through your system. I mean, that's what we're paying for. That's what we want. It's just going to be better.
Yeah, the reason I wanted to bring that up